Hi everyone, welcome back. So this is a quick clip that we're going to get into that was from a previous video. But as always, not financial advice, for entertainment only. Do your own research and invest in following coins and companies. And let's get into the clip. And then let's take a look at Soluna here really quick as well. So Soluna is in the doghouse, as you guys know. They have stopped reporting their monthly production updates as of, I believe it was October was the last one that they provided. So we haven't had one for November, December, January, February, and now March. So the numbers that we're going to look at are basically just their financial numbers. We don't have any data as far as what they're mining now, what their hash rate is, or anything like that. They're just not providing it. And we've noticed that anytime a company stops providing their monthly updates, there's usually a sign of trouble within the company as far as financials and things like that. Okay, so here's the data. And this is from Michael Toporek, CEO of Soluna Holdings, stated, "The last 18 months have proven to be challenging for the entire sector. Our team has risen to the occasion and repositioned the company for success and not only have innovative low-cost facilities, but to drive to achieve the scale necessary to have meaningful corporate level adjusted EBITDA once Project Dorothy is scaled." So I think they had to, correct me if I'm wrong on this one, but I believe they had to give back a facility, one of the facilities at least, because of the debt they had on it. Correct me if I'm wrong there, but I think that's one of the cases there. And also so they could concentrate more on Project Dorothy. Toporek further added, "These accomplishments have come as we have reduced headcount and operating costs while focusing our resources to achieve maximum return on investment." So that's good there, but they have been struggling here. Here are their highlights here. Project Dorothy, regulatory approval for 100 megawatts energization expected in April. This would be very, very good for them. Effectuated significant cost reductions through headcount reductions, efficiencies, and focus resources. So that's good. Develop project pipeline to help more renewable energy plants benefit from monetizing curtailment energy. Fully ramped Project Sophie by March of last year with an operational capacity of 25 megawatts. Proprietary mining produced 883 equivalent in Bitcoin. And then cryptocurrency mining revenue of 24.4 million for 2022. And data hosting revenue of 4.1 million. Sorry, I'm losing my voice here. I'm going to have to clear my throat. Okay, let's try to continue on here. Let's see if I don't lose my voice. So here's what we have for them. Fiscal year 2020 financial results. Let's take a look at the numbers that I do have for them, and we'll get through it relatively quickly here. So as always, these, now where is it? There it is. These spreadsheets are available to my Patreon members. As always, you guys have access to those. This one is actually in the old one. This one's going to be in the miners 2022 numbers. And we put some of the old miners in there. Well, not old miners, but some of the miners that don't provide production updates regularly. They're in there, and I'm only using those to provide financial results in there so we can kind of keep track of them. If they ever do start providing monthly updates, we can go back in here, pull the data relatively quickly, and be up and running without spending a lot of time going back through 3 years of data possibly again. So this is the reason why we're doing it. Excuse me. So let's get into it here. So let's see here. There it is. Soluna. Soluna, like I said, last time we got numbers from them was back in October, and it's unfortunate because they were providing a lot of data in those reports that they were providing us, but we don't have any more, so they're in the doghouse. Okay, so we don't know exactly where they are. We can't really say if they're undervalued or overvalued because we just don't know based on the numbers on them. Okay, now as far as their financial results are concerned, let's take a look at their assets. So current assets is cash equivalents of 1.8 million. That has increased, has gotten better from Q3, so that's good there. Accounts receivable is down 320,000 from 2.0 million, which is also kind of in line where they were a little bit here in the quarters prior. Prepaid expenses and other current assets was 1.3 million, so that's down a little bit here from 1.6, but not tremendously. Deposits on equipment was also 1.17, which is still the same that they had here in Q3, but way down from where they were in Q2. So total current assets at the end was 4.6 million compared to 22 million. Big decrease, but we're seeing that across the board with all the miners. And then when we look at other assets, that's 1.1 million. That's about the same. Property plant was down 42 million from 63 million. Then intangible assets was down also a little bit here, 36 million from 38 million. And then total assets was 84.9, down way down from the 136 that they were at the beginning of the year. Okay. Here's what we got for liabilities. So accounts payable was 3.5. That's down a little bit here from Q3, which is good, but it's also down from Q1. So that's a good trend to have. Accrued liabilities was up a little bit, 2.7 from 2.4. Line of credit was down also, so they paid some of that off. Notes payable was down also to 11.7 from 13.2, so that's good there. Current portion of debt, that went up to 10.5 million from 6.4, so that's not good. Deferred revenue, about the same where it was, a little bit higher. And operating lease liability was down a little bit, 161,000 from 186. And total current liabilities is 29,500,000. That's down a little bit, just slightly from 32.5 million. So they have paid off a little bit of their debt. Other liabilities was 203,000. So not a big increase there. They got rid of long-term debt, it looks like. Either that or they put it up here. Current portion of debt, I think it looks like they might have put it up here. Or they paid it off here. Operating lease liability was 84, so that's down a little bit. And then deferred tax liability is about the same. So total liabilities was 38.6 million compared to 48 million. So a little bit of improvement there, but not much. Okay, let's see here. Revenues. It looks like the revenues have come down here to 4.1 million in fourth quarter. Third quarter, they were at 6.3. So that's kind of the trend that we've also seen here with the miners. Unless you're growing really fast, you're not going to be able to keep up with the network hash rate increases. And then you end up making less per quarter. Self-mining was 3.7 million, and that was down from 5.3. And then hosting was way down too, also from almost half of what it was in Q3, 470,000 from 985,000. Okay, expenses was 3.1 million for cryptocurrency mining. And then depreciation costs associated with cryptocurrency mining was 7.1 from 6 million. Cost of data hosting revenue was 326. So, I mean, they barely made any, they made some money on it. 470 and 326, take that away. What did they make? Roughly, it was 150,000 or so. So about 30% or so. And now selling and general administration was way down. So this is actually pretty good here. 1.3 from 5.6. So that's good. Depreciation amortization was up 4.7 from 2.3. And then impairment on fixed assets was down also to 18 from 28 million. So that's good there. And the cost of revenue came in at 35.3 compared to 48. So they did decrease that a little bit here. Well, about a quarter, I would say. So that's good there on that one. Gross profit came in at negative 31 million. Gross profit margin, negative 745,000. Geez, I can't talk. Negative 745%. Gross profit depreciation was 524,000. And gross profit minus depreciation percentage was 14.11. So that has been coming down here for the last couple of quarters as well. Hopefully things will kind of turn around for them in the first quarter, second quarter, and this year as Bitcoin price has gone up a little bit. Other income, 20,000 looks like interest expense, 518,000 compared to 1.6 million. Loss of sale on fixed assets was up to 1.4, and loss on debt extinguishment and revaluation was actually up here, so that was good there. Income loss before income taxes was negative 31 million compared to negative 56 million. So that was pretty good there, but you can see that was going, excuse me, it was going up, but it came down a little bit here. Consolidated net loss was 31.7 million, and net loss attributable to Soluna Holdings was negative 31.793. Loss per share was $1.66 for the quarter and a loss of $7.42 for the full year. So not a good year for them. I was able to figure out for them here in the metrics that they mined 883 Bitcoin as reported. So that got us to about 208 Bitcoin that they mined potentially in Q4. Don't know where their hash rate ended at. Couldn't find that information. So it's kind of hard to figure out what their per exahash was going to be. But we can see that cost to mine 1 BTC was, this is going to be 169,000 with everything included. If you take out all that stuff, so cost to mine 1 BTC minus depreciation was 15.2 thousand, so a lot better here, but it kind of in line where they've been before. Enterprise value was 9.4 million, and what's their 9.4 market cap? So that kind of sums it up right there. Debt to equity was 0.92, so that's pretty high. Current ratio is down 1.5, so that's not good there either. And then book to value is 46 million. Price to book ratio is 0.204. Revenue for their self-mining was 4.1 million. General administrative compensation was 1.38, so that's about 33%. So that is better than what it was here in Q3, Q2, and Q1, which was just ridiculous as being high on that one. For the year, it came in at 67%. So overall, they are doing some things that are better. They are trying to minimize their expenses, everything else, and hopefully they can get the heck out of this kind of slump that they're in right now. But as far as also their miners are concerned here, if we look at their miners, they have a lot of older miners that were just These numbers were calculated based on what they provided as far as setting how many miners and the exahash they had. So this was kind of a mixture of different types of miners that they provide information on. The best ones that they had were the 87 terahash miners that they were bought here in, I don't even know when those were bought in. But everything else from that was really, really old. And I would be surprised if any of that stuff is still operational unless they have really, really cheap power, which they might. I think they said that they're like at 2.5, 3 cents of power possibly on average or something like that. So if that was the case, then those might still be profitable. Okay, overall, like I said, they're getting a little bit better there. They're cutting the costs, which is good, but they got to get newer machines and they got to get Project Dorothy up and running as fast as possible, which is going to possibly end up saving them in the long run. Okay,